And joining us now, Mike Kruse with Ag Consulting Group is on the show today. Mike, great to have you on with us. How are you, sir?
Good. Thanks, Jesse.
Appreciate the time, Mike. Thanks for joining us here today. Let's talk markets, and I think top of mind, of course, Friday's August WASDE report. Looking at the numbers, felt like everything was pretty much in line with what the trade expected, outside of a few things. USDA's the headline numbers, I suppose. National corn yield 175.4. That's down from the July estimate. Soybean yield up slightly, 51.9 bushels per acre. So I mean, you take a look at the WASDE here on Friday, Mike, and just kind of the reaction in the trade overall. What are your general thoughts? Was anything did anything surprise you? I guess let's put it that way.
No, we had average trade estimates. Let's talk about corn yield first. 177 was the July number. Historically, on the August report, the USDA doesn't like to make any significant changes because they really haven't done any surveys. It's pretty early yet. And so they hate to overreact and then have to correct themselves in September. So, I think some of the bulls were hoping for more of a reduction. You heard private estimates out there anywhere from 165 on the bottom end up to 178 or 9. And, some of those estimates might be where they think the yield will end up in the fall, maybe not necessarily where this report came out with. So, they lowered it down to 175.4, so about a bushel and a half. I think there's quite a few in the industry that think it's a little lower than that. I live out in the West, and it's kind of the tug of war between us and the East on how the crop looks. And, we do have irrigation, but it's not all irrigated out here. And the crop really has started to set back. It seems like more the end of this week. I think there was still hope that rain chances could happen a week ago or help. But we're getting to the point now, by the time you get to Sunday, not sure they'll help in a lot of different fields. I think still do some good in the soybeans. So on the corn number, bushel and a half, I think, like I said, people were thinking 2 or 3 that it might go lower, but that seems like an okay number there for me. Beans, probably a little surprised that they raised the yield. They went from 51 to 51.9. Beans are interesting. You can step on them and kick them and move them around, and they still find a way to yield. I think we're doing a lot of work, in some of these drier areas where you've got pod fills out there. You would think now is a pretty crucial time. But again, there's been areas that have caught pretty good rains. They're going to finish beans up pretty good. I think one of the things that we were concerned about was taking a look at the acres. And they've thrown curveballs like that before, where you lower the yield 2 or 3 bushel and then you increase the planted acres, and then the number stays the same at the bottom. But both of those actually went down just a little, not much, but kept them flat anyway. So the fear of them raising or finding 500,000 acres or 600 or 700 didn't appear like it happened on this report.
And it felt just like the report overall. You look at the global numbers. I know there was a few changes there in Europe, et cetera. But overall, you kind of mentioned this. Some of the bulls were looking for a really bullish number. Some of the bears were wondering what's going to happen. It just felt kind of neutral overall when you really kind of put everything together and kind of got the lump sum. At least that was my general thought. Was that yours?
Yeah, I would agree. We've had a pretty decent week of trade this week with corn and beans both being up. So you could argue how much of this was already priced in, especially on the corn with them lowering the yield. And then when beans actually raised their yield and they've been up on the week, then there's probably a little room to take something off. Now, as we talk here, an hour since the report's been released, beans and corn have kind of rebounded nicely from where their immediate reaction was after the report.
Well, Mike, thinking about moving forward here, the back half of the month, one thing that I keep reminding folks, and we have to keep in mind as well, is that, these USDA numbers were as of August 1st, and they didn't have boots on the ground yet. We'll see that more as we get into September, October, et cetera. But just thinking about where prices stand right now, and if I'm a producer, if I didn't have any coverage going into the report and maybe I'm looking to make some sales, let's talk risk management. What are some thoughts you have as we head into the back half of August here, and we may be seeing some more crop deterioration since USDA took these numbers? I mean, what's some thoughts with some risk management strategy right now?
I think most of the producers are going to have to look at what their own fields look like. Individually out east, if you feel like you've got a pretty good crop coming on, I'm not a very good seller on the way down, but it's still a pretty profitable number. I know I look at new crop today at 6.25. Yes, it got as high as 760, 770, but 6.25 is still a pretty good number. I mean, $6 cash corn, depending on where basis is at. I think basis is going to be good next year. I think you got to look at rewarding it a little bit. I mean, I still go back to the calendar working against us. We are coming up on the middle of August, and historically, when you look at the seasonal charts, and I don't know what normal is anymore, but historically, you get into August, you've got some risk premium taken out. Pretty soon, the weather is not going to matter, the forecast. I mean, we watched that for about 60 days, and pretty soon the weather forecast is going to be what it's going to be. So even though we are not where we were, but if you happen to be in an area fortunate enough that caught a rain shower and feel a little bit better about your yields now, I think I would there's various ways. You could go out, just make cash sale. You could do no base established or hedge to arrive with your end user and lock in that futures and then maybe lock in basis. Or there are some minimum price strategies out there where you could do what's called a min max. You buy a put that gives you a floor and then sell a call over the top. So you have a window or range there. If you're still bullish and the market runs higher, you're still in the game. But if something changes, if this yield comes out a little higher, black swan event, you got China, Taiwan, a lot of outside stuff going on. If you can put in a floor around $6 with some upside, probably help you sleep a little better at night for that whatever event pops up that we don't have on the radar today.
And that's a great point you brought up there, Mike, is just all the other issues that we have outside of report numbers and yield estimates and the weather, is the geopolitical issues and watching, grain shipments out of Ukraine. What do we see there? I mean, it feels like just the volatility, even though we maybe slowed down a little bit here in the last couple of weeks, the volatility obviously this year has just been off the charts in these markets.
Yeah, I would agree. These options have been expensive for people that wanted to buy calls or do something. And the volatility has just been off the charts, tight carry out. We're at high price levels. What is the new norm for corn price? I mean, some would say with all the inflation that's going on, we kind of went through this in 2012 where $8 corn and $20 beans is where we're going to stay. And we know how that worked out. I think that's in back of people's minds. I don't think 350 is the norm. That's where we were for the last 4, 5, 6 years, but we're not totally convinced it's 650 either. And so you want to make sure you're protecting profitable level. Like I said, if you're in an area that has not caught rain, most of those farmers are kind of hold frozen at the wheel, wait and see till I get a better comfort level of what I'm going to have for bushels.
Well, Mike, fantastic stuff. Great analysis. And I know you and the team there at ACG Ag Consulting Group, you guys got a lot of great folks there, a lot of great insight. And I know if producers need a little advice, I'm sure they could reach out to you guys online or give you a phone call, couldn't they?
Yeah, that would be great. If you're interested at all, Ag Consulting Group, we're located in Kearney, Nebraska and Princeton, Illinois. And if you have any interest in visiting further about any marketing, you can contact us at 402-750-5260.
And I know as well, those numbers are online, youracg.net for Ag Consulting Group. With that, Mike Kruse, appreciate the time. Thanks for joining us on Market Talk, sir. We'll have to get you back on again real soon.
Okay, thanks, Jesse.